guys, it's Henry from IFE. So today I want to touch on Q1 of 2021. In a previous video we did a kind of analyst of a few of the major indexes in Q1. Now I want to look more into Q2, Q3 and even Q4 of 2021. Some of the indexes, some of the shares and some of the sectors that are potentially undervalued. So if you do want a bit of a recap, please have a look at the link to the video for the Q1 2021 analysis. In short, it's been a good run for what it has. I didn't think it could go much higher. It did take a bit of a dip, and as I'm speaking now, indexes are near all record highs. Mostly brought up again by the Biden stimulus package, and when Robinhood did a survey of what they'd do with that, 36%, if I can remember correctly, said they would invest it. It's obviously going to bring the stock prices up even more, especially more of those tech stocks that are driving the likes of the S&P 500, because they're heavily weighted. So Q2, Q3, where do I see potential value? As I said before, stock prices are still quite high. The indexes and a lot of the developed nations are still quite high. One of the best ones potentially see is the FTSE 100. Just the way it's kind of weighted in kind of defensive stocks, banking, insurance, see them as sectors, oil, mining as well. A lot have been written off. See that as one of the kind of undervalued ones of 2021 that could potentially, a reform does come in, that could be more stable. Is something to look out for is a weaker dollar. Obviously it gets a lot of its earnings from overseas, so it does come in the form of US dollars. So stronger US dollar could obviously not be too beneficial for it. But as far as sectors, two that may be surprising is banking. Again, if you look at the likes of HSBC, Lloyds in the UK, Barclays, they're all down 20%. What they'd be in a year, 18 months, or even their 5-year earnings, but yet their profits seem to be reasonable, not fantastic. I've talked a bit about investment banking and how that's the optimise of that, and more into the wealth management sectors like UBS and how they've kind of come across, but see that as a potential one to look out for. Also, companies in the oil sector. Now, it's been a kind of ESG has been the topic of 2020. You've seen a lot of growth in the ESG ETFs, indexes, and a lot of shares as well. I've done a bit of analysis on Canadian solar. Have a look at my website for that. Last year, it grew 110%. But I also think the oil companies, they're not oblivious to the outlooks in the sector. They know what's coming. They're also putting a lot of R&D into renewable energy, and also oil isn't going away anytime soon. I think it's still got a shelf life of 10, 20, 20, and with 2021 looking to open up with travel again, it will become a use of a commodity. And also with the logistics of OPEC keeping the supply and demand in, it's one to look out for. Shares, I've said before, Royal Mail, I think that's an undervalued one because of the acquisition of the parcel company. Again, people overlook it because they believe letters are dead, but the intrinsic value of the company and what it's acquisitioned, I believe that's a good one. For more information, feel free to put a link to the blogs or get in touch at info@investmentforexpats.com. Thanks guys.